Welcome to the daily update, where I'll go over the action in the market for Thursday, December 4th, and we'll see how things look for Friday, December 5th. Another sleepy day. Now, we're trying to start a trend in the short term, and it looks to be positive, but we're just barely above the moving average. We're still not trending in the intermediate term. That's why we're seeing a lot of this choppiness that's continuing. Now, there's a lot of anticipation for Friday's session because the personal income and spending will come out, but the big report that's part of that is the core PCE, and that's the Fed. That's what they like to look at for inflation. We haven't seen that in a while, so we'll see if this has some kind of an impact. Now, we're looking positive on all three time frames, and we're showing some improvement. We're still seeing this growth underperforming value. Mega caps didn't have a real good day on Thursday. Some were up, some were down, and they kind of canceled each other out. Now the small caps are coming on a little bit. When we look at the S&P 600 small cap index, that was actually down on the day. But when we look at the Russell 2000 and the IWM, which is the ETF that goes with that index, we're setting an all-time high there. Not by very much, but small caps are now historically coming into a time of favorability here. We'll see if that can continue, whether you call it the Santa Claus rally, the January effect. We've seen that over the last few years, and then that goes through into January, and we'll see if that can continue, if that's what's happening, or does it stop and then kind of goes away for a while. But we are looking okay. The market's holding up quite well. We're just not trending right now. So on that front, I've been doing a lot of market neutral type strategies that have been working very well. You just set things up and let each day pass, and time decay, which is called theta in options lingo, that just works to your favor. And it's been a very effective strategy as of late. All right, so from now until the end of December, everything is free on the website that I have. It's spxinvesting.substack.com. Please feel free to check that out, see if it's of use to you. There's additional information that I post there. All you have to have for right now is just an email address, and at the end of December, you can just unsubscribe if you find that I don't really know if I like this. And there's so a lot of differences or different things that I'm going to be rolling out at the beginning of 2026 and changing some things around a little bit in that regard. But in the meantime, check this out and just see if it fits into what you're trying to do. All right, so to go back over what happened on Thursday, we did have a higher open. And now we've been dealing with the 6860 level. That set the intraday high right around there. And then we declined below the unchanged level, so then we ended up going negative. We found support at the daily pivot at 6841. Then we just chopped. We went sideways between the daily pivot to the downside and 6860 to the upside, and we ended up closing slightly positive. We were up just 0.11% on below average volume. It's been picking up since the shortened week that we had last week, but still it's below average overall. And we're positive on all three time frames. We're seeing a bit of a rise with the 10-year yield right now, but that doesn't seem to be having much of an impact on stocks. We've got all kinds of geopolitical things that are happening, not really having much of an impact on the market as of right now. Okay, so some comments. We saw very choppy sideways trading, and it ended up being a range-bound day. There was really no conviction. Small caps continue to do well. The IWM did set a new all-time high, as I mentioned there. And then now in the bigger picture, growth is still outperforming value. And I'll be going over that over the weekend in the intermarket analysis video that I do. That's still looking okay. It's just more in the short term we continue to see growth underperforming value, and that's a market that's possibly getting ready to be more defensive. But if the mega caps and large cap growth can really kick back into gear and do well, and maybe Friday will be a catalyst for that with the core PCE coming out, one way or the other, especially from a positive perspective, because we're looking more positive right now. That could change that, but it's not changing right now. And there's still this pretty much according to the market, it's a done deal as far as next week the Fed will come in and cut rates. That's one of the reasons why small caps are doing so well. They like lower interest rates because they don't have to pay as much in interest, and that can go more to their bottom line. We still have on the negative side this confirmed Hindenburg Omen. We'll keep watching that. We haven't seen any confirmation spikes lately. We need the market to really move for another one of those spikes to be generated. And since we haven't been trending lately, that's staying in the background for right now. We still want to know that it's there, but every day that ticks by, this Hindenburg Omen becomes less and less relevant. But again, we could really pick up and start to move. There could be another spike. And then we're kind of right back looking at this at the forefront. And that's on the negative side. And then Friday's session, and we're going to have to see some real big market movement here. We have an unconfirmed ZWAG NYSE breadth thrust. Now, to be official, it needs to be confirmed by Friday. Now, we're not going to know that until after Monday. There's a 1 day lag with that chart as it updates through stockcharts.com. They take all the criteria and put it together into one chart. We'll have a pretty good idea. We need it to be an update on Friday for the possibility of this breadth thrust to be confirmed. And it's not necessarily negative if it's not confirmed. We can still have a positive backdrop anyway. Then we're still looking fairly good here with the short-term conviction. We have the Stochc RSI, Williams percent R, and stochastics. Those are showing that the short term is showing positive conviction. Intermediate term, we've dropped off the list. Now it's back on the list. The CMB composite. That's looking a little extreme there. And then we'll see if anything develops as far as the core PCE coming out. Is there going to be any likely change to the scenario? The market's, as I said, pretty much counting on there being a rate cut next week. The dollar was up. We're still below that 100 level with the US dollar index, and interest rates were up. We climbed to 4.11% with the 10-year yield, where we were at 4.06%. And we are improving as far as sentiment. Now, just the number by itself, 39, that's negative if you look at that in isolation. But if you look at it in context, we came up from 26. And so that's a pretty good improvement from what we've been seeing. We were extreme negative there for quite a while, and now sentiment has been improving. When we're not extreme positive or negative, we tend to go with that. So right now we see this as more of a positive thing. And we're still not trending in the intermediate term. We're trying to develop, as I said, a trend in the short term. I'll show you that chart, but we're not trending in the intermediate term. However, we are still positive because the green line is above the red line, but we're below 20. We're below the moving average. With the very slight update, our bias is positive, and our momentum, I'm still keeping it mixed to positive. And again, the reason why it's mixed is number one, we're not trending. Number two, we're still seeing growth underperforming value, which is not what you see in a really solid market environment. Okay, so we did get the weekly initial claims, a real big drop here. And this might kind of freak out the market because one of the reasons the Fed has been more reluctant to lower rates is that the employment situation has been holding up, and this is really holding up. We saw a big drop here, 191,000, much lower than the 220,000 that were expected. The last time we had this report, it was 218,000. So it's the market could have just freaked out on this news. And the continuing claims still coming in under that 2 million level at 1.939 million. That's a little bit down, not very much of a change from the prior reading that we saw there. And then we did get the delayed report of the trade balance. They didn't really show all that much. I'll go through and look at the numbers there. All right, and then factory orders were up 0.2%. Last time they were up 1.3%. A little bit of a drop off that way. So here are the weekly claims where we're seeing a real big drop. We've been around this 220 range, kind of the high end, low end, sometimes into the 240s, sometimes down into the 210s. This was a big drop, and that could have freaked out the market, but it didn't. And we are coming down here with the continuing claims, but it's still in this higher range of what we've been seeing overall. So, according to this, now we haven't had an employment report in a while, and we're probably not going to get that until next week. So it's not really taken as official, even though this is closer to now as far as the data that we're getting. We'll see if, when we do get the employment report, if that has much of an impact or if it's ignored and treated as old news. So putting it all together, the red line, this is a big drop down here with the initial jobless claims, a little bit of a decline with the continuing claims. We're still up at 4.4%. We won't get that adjusted until the next employment report comes out. All right, so the trade balance here still coming up, being less negative than it was before. This is a 3 month average of the trade balance. And then you look at exports and imports here, both are going down. The blue line, those are exports. The yellow line, those are imports there. And then looking at the deficit, less negative than what we were seeing previously. All right, and then we have this from Real Investment Advice. There's cycles in the market, and I've done a lot of research over the years in this, and sometimes cycles really work well, sometimes they don't. And about the time you find a cycle that does work, it tends to change to something else. But this is based on Robert Schiller data, and we call it the real S&P 500 as opposed to the fake one. No, real just means that inflation is taken into account in the calculation here. And this is still showing that we're kind of midway through if we're following this current cycle. You can see other cycles going all the way back to the 1800s. So this is quite long term here when we tend to bottom and then go through a cycle and then go down. We still could have some more room to run to the upside. Again, this is so long term and such a big picture look that it's kind of hard to make any shorter term decisions based on this. And then December's been very strong lately in year one of the presidential cycle, going back to 1985. There was only one down year, and that was 2005, which was a pretty difficult year after all. And we still were down 0.1% that year, but we've been up 90% of the time with an average return of 1.9%. The median is 1.7%. So we do have historical precedents on our side, just going back to 1985. And then data center electricity consumption. This is one of the things that I've been reading a lot about and hearing a lot about is that with all these AI data centers and AI and all the massive amount of computing power that is needed to generate that, we're going to need a lot of electricity. And this just talks about different countries and how much of the countries use electricity here. And that's why we're kind of shifting our attitude when it comes to utilities and the whole sector, energy sector, because is it a growth area now? Because we need all this extra energy to run AI, and is there going to be any electricity left for us to turn on our lights or run our own computers or anything? Because all of it's getting sucked out by AI and the need for computing power. And then that's why we're seeing some nuclear options coming back on the table now as a possible way of generating electricity. So this breaks it down just by country based on what we've been seeing, and then how this is really going up. And this is forecasting out, so we'll have to see just how true that ends up being. Then the median performance after the Fed cuts rates, this goes back to 1957. Again, as I always say, it's the context. Why are they cutting rates? Now, the economy seems to be doing well. GDP is holding up quite well. Inflation, we'll get another read on that on Friday. But according to CPI, it's stubborn. It's up around the 3% level where the Fed wants to get it down to around 2%. So they would be coming in and cutting rates just to kind of tweak the economy, not because the economy is falling apart. And that's the context. And when we do see rate cuts in that context, things tend to be more positive. And if they're cutting rates because the economy is really having trouble, then that's when we tend to see more negative reaction after that. All right, then the median 10-year Treasury yield performance before the cycles going back to 1966 here. And this is kind of the interesting thing that we've been seeing lately. Over the last couple of times that the Fed's come in and cut rates, we've been seeing rates decline, and then the Fed comes in and cuts rates, and now the 10-year yield starts to go back up, which again goes against what you would think would be happening. All right, then the global economy is on the cusp of cyclical upswing next year. Okay, all right. Rising leading indicators, they think that things are going to get better according to this chart, and that bodes well for things looking forward. All right, and then returns for the sector um, since the launch of ChatGPT back in 2022. And yeah, a lot of these areas have seen really good returns here. So yeah, it's a real life changer. As far, think of it like the radio or the car or the train or the airplane and cinema, TV, all those things that have come along. And there's a lot of fear. There's excitement and fear at the same time. And then how's that going to shift things over? I mean, just look back to smartphones and how that's changed everything just within the last 20 years or so. All right, and then the ChatGPT global order says outside the US, mega caps AI has not changed the international balance, according to this chart put out by Bloomberg. This is FTSE, that's London, that's their exchange here. So not much of a change according to this. And they normalize it and they tweak all the numbers around here. Challenger job cuts. U.S. employers announced 71,000 job cuts in November, and then a year, 57,000 a year ago, and then 153,000 in October. Notably, the 12-month moving average of cuts has crossed above 100,000. Hiring plans, meanwhile, were the lowest. So this is a little bit of a threat, according to this report, that the employment situation isn't as strong as we're necessarily hearing from other government reports that are being released. Gas prices actually going down here. You look at it down just under $3 currently. And then hedge fund concentration. Most hedge funds are in the top 10 stocks here. And not a real surprise that way. And it's also called the crowded fund, the, the areas that most people are in. And this continues to rise as well. That's why we focus on the biggest stocks a little bit more than some of the other stocks because they have so much of an impact on how the S&P 500 behaves. And cash burn, OpenAI may continue to attract significant funding and could ultimately develop products that revolutionize our world. But again, it's like pay me now, pay me later. It's like, okay, we're paying them now to hopefully get paid back something later. A lot of money going in. Largest cumulative losses before young startup companies turn to profit. I remember, back in with Amazon, it was like a big party day the first time they actually reported a profit because they were having losses for years and years. Netflix, the same thing. They went years and years without actually generating a profit. Okay, so let's go back and talk about what happened. Very choppy day. Not an awful lot of conviction. Higher open, that set the high right there. Came down, went negative, found support around the daily pivot, went positive, came down. We looks like we were going to break to the downside here, but then we saw some buying immediately coming back in. Found support again here at the daily pivot, and then right going into the close, a little bit of a thrust up. We would have ended up closing negative, but this little push up at the end ended up seeing a positive close. And so, we're pretty, not really showing all that much in the initial overnight session. I checked right before I started recording this, which is many hours before the market opens, and we're up about 1/4%, but pretty quiet right now. And if there's gonna be something that could break us out of this choppy lack of conviction, it's probably gonna be Friday's report. If we get mixed signals or if the market tends to say, well, it's not all that important after all, we might stay in this sideways, trendless type of an environment. And here we're still seeing the red line above the blue line when we look at large cap growth to value. They're both doing okay, but we would like to see the blue line above the red line showing growth outperforming. Not much of an improvement here, but we're not really turning negative either with the S&P growth to value intraday chart. So end of day here, growth was up, value was down for the large caps, it was up for the mid caps, and up where value was down for the small caps. So this is looking pretty good here, the small cap growth to value ratio. Now, we're not at an all-time high with the S&P 600. We still have a ways to go. That was back in 2024. So we're going to have to break out of this range. It's the Russell 2000 small caps that are showing a new high that's just been generated. And not looking all that good here with mid cap growth to value. Still below the moving averages, not really improving all that much. Same thing can be said here with S&P growth to value. This is the concern that we've been seeing. We have been coming up over the last few sessions here, but we haven't been able to get back above the moving averages. And we're still in the rainbow, not moving all that much with this growth to value ratio. Back down a little bit below the 50-day moving average when we look at discretionary to staples. So when I say growth is underperforming value, the charts that I just showed you, including this one, that's what I'm talking about. So we're trying to get a little bit above the moving average here in the short term with the ADX, but it's really not, it's flat for the most part with a slight move upward here. But we do default to positive in the short term with the green line above the red line, but we're not trending really right now. And we're still right about on the moving average with the intermediate term. This is what I base things around here, but we are positive, although we're not trending. And we're still below average with volume. Kind of picking up over the last few sessions. It's picked up from what we were seeing before, but still below average overall. And we're looking green again here with the gamma exposure. So we do have some overhead resistance here at the 68, 70 level or so, maybe 65. It's hard to know. That 70 would be right in here. So we do have some overhead resistance that we need to be aware of. And we've been dealing with that 68.50 level. The last couple of trading sessions have been the 68.60 level. So if we do start to go up, this could produce some overhead resistance in Friday's session. But also the takeaway here is that everything is green right now, and that is more positive from a gamma exposure perspective. And we're still declining here with the VIX, with the line chart. We're below 20 and declining. We're also declining with the bar chart. And then VIX falls back as anxiety over valuations, rate cuts fades. Well, valuations, again, that always gets blamed for everything whenever we go down. But this is just another chart put out by Bloomberg showing how the VIX has been going down. And we're also kind of going sideways right now with the volatility of the VIX itself, below the moving average with the bar chart as well as the line chart, and just not really moving all that much currently. We did get the latest reading from individual investors here. They're actually net positive now for the first time in a few weeks. We're at 13.5 overall. Not extreme right now, but they're starting to feel a little bit more optimistic. And this was largely a survey based on Thanksgiving week when we had a really solid week. And then the individual investors increased their allocation to stocks to the highest level and blah, blah. Cash allocations are at near lows here. So folks are starting to throw money back into the market that way. And not really much of a change here with this fear gauge. We were unchanged with this overall ratio where we're declining a little bit here. So a little bit of fear coming out of the market with this fear gauge. Declining here with the equity put call ratio daily chart. But this is actually turning more positive. We're seeing more conviction and declining now getting below this red line, which quite often is an extreme reading. And oftentimes when we get to a real low reading like this, that can signal some kind of a top. But you can see we can come down here, go back above, then come back down again. To smooth it out a little bit more, I also like to look at the 10-day moving average. And this is declining, which is also positive as well. And we're still going up here with the risk on to risk off ratio. That's positive. We're still going up with the high beta to low beta ratio. That's positive. We're not showing a real increase in fear here with the volatility risk premium. We're below the band. And we're doing okay here. We were pretty much flat with the advanced decline line based on price. We did see a little bit of a tick up based on volume. That's encouraging when we see volume doing a little bit better than price. And we are above the midpoint and going up with the advanced decline ratio, both in the short and intermediate term. This has been improving a lot lately too, above zero with the advanced decline oscillator. Now, if we get up above this red line, that's when we start to look extreme, but we're not there yet. And internally, we're looking pretty good, seeing an expansion of the new highs, not many new lows. So the 5-day and 10-day charts continue to go up. Our three smart money indicators are still positive here with the longer term accumulation distribution, shorter term still above the moving average. We're still going up with the Chaikin money flow, and we're going up with the Chaikin oscillator. All three are positive. And we've switched back over to positive with the vortex. where we had gone negative after Wednesday. Now, after Thursday, the green line is now going back above the red line and holding up fairly well here above the moving average with our advanced decline line studies. We're flat to slightly down with the NYC common stock, flat with the S&P, flat with the mid caps, and a little bit of a decline with the small caps. But overall, the advanced decline lines are holding up fairly well. A little bit of a decline here, but still well above 50 with those stocks in the S&P above their 20 period moving average. Bit of an improvement with those stocks above their 50 period moving average, 100 period moving average, and a little bit of a decline with the 200 moving average steady. So we're still trying to break out of these series of lower highs that we were seeing here. And so far, that tends to be holding up fairly well, and we're still above the 50-day moving average, but we continue to be below average with volume. A little bit of a decline with the 20 period moving average study, but still well above 50. We're climbing above 50 with the 50 period moving average study and above 50 and holding up fairly well with the 200 moving average study. And then we look at the short-term conviction with the Stochk RSI, that's showing things as quite positive, as is the Williams percent R. But the CCI charts are not quite there yet. They're positive, but they haven't gone above 100 here with the CCI 14 or the CCI 20. Stochastics looking pretty extreme here with the short term. And again, this is a further subdivision of the short term time frame. So this is like very short term, just a day or two. Then we have intermediate short term, which might be a few more days, 3 to 5 days. That's looking extreme. And then we go out to maybe a week, 2 weeks or so with the long short term stochastic here. All of these charts are quite positive. We're extreme in the short and intermediate term. And still positive with the force index, green and above the midpoint. Still above these shorter term moving averages, the 10, 20, and 30, and the lines are starting to go back up. That is positive. It'll be even more positive if the green line gets above the other two lines here. That's the shortest term moving average. And when that's on top, that's when we see more of a convicted upward move. And we're still looking okay with the short-term trend based on 20 periods. The blue line and the green line, they're coming together, but price is above both. And we're 0.49% away on a closing basis from an all-time high for the S&P 500. And we're still more than 10% above the 200-day simple moving average. We just want to be aware of that. That can suggest that maybe we're getting a little overextended in the long term. Up into the +2 channel with the standard deviations chart. And above zero and going up, the balance of power is positive. And here's where we're extreme again with the CMB composite. We came all the way back down. We were a little bit below the black line. Now we're back above it. That could suggest we're possibly a little overdone here, even though we've been going sideways. For some reason, this indicator is picking up some strength. And we are positive with the go, no go, darker blue bars there. Still above the midpoint, but you can see the blue line here, especially lately. It's pretty much flatlining. That measures the highest high value. We want that to be going up in a more positive environment, and it's going sideways. On a positive side, though, the red line, which is the lowest low value, that's also going sideways and pretty much flat right now. We are positive with the TTM squeeze, and that's been consistently looking stronger as we were coming up out of that big down day that we had back in November. And even with the last number of days of not really going anywhere, over the last 10 periods, we have been really moving, and that's why the standard deviation chart is still well above the moving average. Once these big move days here start dropping off the calculation and we don't see any more movement after that, we might see a real drop here with the standard deviations chart. We are turning up a little bit, but still negative with the ease of movement, and we're still negative with the Arun. The oscillator's below zero and flatlining. And the McClellan oscillator declined just a little bit, but overall we're still above zero, so that's treated as positive. So we're still going up with the summation index based on price and volume. A little bit of a decline, but still below zero with the NYSE McClellan oscillator. So we're still going up with the summation index based on price and volume for the NYSE. We're still declining here. We have been over the last number of trading sessions. The Swelling Trading Oscillator is not really picking up anything positive. It's seeing things more negative as we're declining based on price and volume. But the momentum is still looking more positive with the PMO above the moving average. We're also going up based on price and volume here. We declined a little bit, but we're still above 50 with the PMOs that are rising. We're topping out here, but still above 50 with the buy signals. And we're still slowing down, but going up barely here with the PMOs that are above zero. Positive with the Elder's Impulse system. Positive with the Parabolic SAR. Positive with the short-term slope oscillator and MACD. So intermediate and short-term oscillators are positive. We're starting to turn up and cross above the moving average with the two long-term oscillators, the Trix and KST. And the Copic curve is positive. And we're kind of flat here, but still looking quite positive overall with the Sean trend meter. We were able to get back above 50 with the money flow, so that's positive there. And we actually ticked down, but we are well above 50 with the ultimate oscillator. Still looking positive, setting a new all-time high here with on-balance volume. And we're still above 50 with the intermediate and short-term RSI. And we continue to go up with the bullish percent index for the S&P. And that's been showing some real strength lately. Not necessarily the big large cap growth stocks, but other stocks in the S&P which could be more value oriented, and smaller stocks that are still in the index. They have been seeing some more favor lately, and that's why we're seeing this going up. Also going up with the NYSE bullish percent index and the NASDAQ 100 bullish percent index. And still looking okay with the intermediate term trend based on 50 periods. We're above the blue line and the red line, and both lines are going up. We're above all the plotted moving averages here. We've just been chopping along sideways as of late. And then we have a pring bottom fisher. I'm not sure what kind of a bottom we hit, you could say, but there was a quite a big delay from the time that we hit the bottom back in November until we started to get a signal from this. And still looking pretty good here. We're up 0.12% so far for the week. So if we have any kind of a positive close in Friday's session, we'll be up on the week. And still looking good here from a trend perspective with the hike in ASHI. It's not really moving all that much, but it's remaining positive. We're also still positive with the KG chart, the Renko chart, and the three-line break chart. Longer term, still holding up all right with the 150 and 200 moving averages there. And we want to see if we're going to get a confirmation with this WAG NYC breadth thrust. We need to get up to this red line, which probably means we're going to have a pretty strong blowout day in Friday's session for that to happen. Now, again, if we don't get that, this is still considered to be positive. It's just not an official signal. And this shows you what it's like when we do get a ZWAG NYC breadth thrust. And this shows what it's like when we almost get a ZWAG NYC breadth thrust. And those statistics are quite positive. So still positive on all time frames across the different indexes, still negative in the short term with bonds and on the dollar, still negative with the dollar in the longer term. So we had communication, which is a growth area. It led things, but even it was only up over a little over 0.5%. Industrials were up, energy was up. We liked that tech was up, but still just a little bit more than 1/3% there. And healthcare, which has been seeing a little bit of weakness lately after that monster November month that it had as well. And discretionary was down, staples were down a little bit more. So we started off kind of positive here because we had that higher open where the NASDAQ went above 23.5. Canada started off looking pretty good. We had a BPI cross above 50 with the industrial sector. And then right after the open, the Dow got above 48,000, and then discretionary had a BPI cross above 70. We want that. We want that to continue. But a lot of this, you can see the time. This is 2, 3 minutes into the trading day, and we didn't get any signals after that where the Nasdaq was pulling back under 23.4 later on. So you can see some red, some green, very Christmassy here with the overall market carpet here. Both Google stocks were down slightly, but Meta was up. Amazon was down, Tesla was up. Nvidia and Microsoft were up, but Apple was down. So there wasn't really a lot of conviction across the board here. And the Dow was virtually unchanged, but down slightly, still above its 50-period moving average, still above this monthly pivot point, still positive with the Elder's Impulse system, and hanging out okay. We were up 0.22% here with the NASDAQ, still above the pivot point, still above the 50-day moving average, still positive with the Elder's Impulse system. NASDAQ 100 down slightly, but still above the pivot point, still above its 50-day moving average, and still positive with the Elder's Impulse system. Momentum, NASDAQ 100 continues to be positive. And this is where we're not seeing this previous high here with the S&P 600 small caps. They were actually down 0.2% and just coming back into a price range that we've been in before, which also matches up with we're a little bit above that now, but we'll have to see if we can get more of a thrust up here with the small caps. But we are looking better here. And on a closing basis, we did set a new all-time high with the Russell 2000 small cap. This is the IWM ETF. Positive with the Elders Impulse system for the small caps. We were up 0.46% with the mid caps, but still kind of right back to where we've been before. But we're still positive with the Elders Impulse system. The Wilshire was up slightly, still above its 50-day moving average, up slightly with the total U.S. stock ETF, and not really moving all that much. We were down just a little bit with the FANG index, but we're hanging out above the 50-day moving average. And Apple was down after setting a recent all-time high. Amazon still dealing with its 50-day moving average, and it was down. And then we had Microsoft up here, but not moving all that much. And Google, not far from all-time highs here, but it ended up being down. And then Meta, we're starting to see a death cross here. The 50-period moving average is starting to drop below the 200. Even though it was up 3.43%, it's just dealing with its 200-day moving average currently. And Nvidia still, it was up, but it's still below its 50-day moving average. And then Tesla, it gained over 4% on Wednesday, another 1.754% here on Thursday. So this is looking pretty solid here. But now we're seeing a death cross with Netflix. So we're seeing a couple of the big, really big stocks starting to show downtrends. And this is continuing to decline further below its 200-day moving average with Netflix. And then we see a bit of a mixed picture here. The Dow Jones Semiconductor Index was actually up and it's above its 50-day moving average, where the SMH Semiconductor ETF was down on the day. And we're still more than 100% above the 200-day moving average when we look at the Dow Jones Semiconductor Index. Please be reminded, this is a weekly chart, so this is longer term here. But this is where we often see exhaustion. But we've been up here for a long time now. And the correlation is getting a little bit stronger as Bitcoin's been trying to go back up. The NASDAQ 100 has been trying to go back up a little bit here. And the correlation is getting a bit stronger between the two. And we're still declining overall when we look at the staples to tech ratio. Oil was up. We're getting into the high 59 range again here. And this shows that we were down. We actually ended up being up slightly with the US dollar index, but it's still in a downtrend, still below 100. And then bonds, we did tick up here, but we've been here before with the 10-year yield right around the 4.11% area, still above the 50-day moving average with the 10-year based on price. So we came down, but we're still above the moving average, which is starting to turn up when we look at the Qs to S&P. Still above the moving average with discretionary to the S&P, still below the moving average when we compare large cap growth to value. That's why we're just not really moving all that much right now. So we're still below a declining moving average with the large caps, mid caps, and we did see a bit of a breakout here. This is looking more solid here with the small cap growth to value ratio. And still declining shorter term here with the staples to S&P ratio. When this is going down, that is more positive. And then here is the Hindenburg Omen. We have the initial spike back on October 10th, and we have the confirmation spikes. The further we get away from this, the less relevant it is, but if we really start to move, another spike could appear here. So what's the outlook then for Friday? We're positive on all time frames. We're going to be getting factory orders, consumer sentiment, personal income and spending. The big one's going to be the core PCE, and then we're going to get consumer credit as well. We'll see if anything geopolitical ends up having an impact on the market. And this is also finishing out the economic calendar for the week. So this also shows where core PCE is the real big deal in Friday's session. Seasonality, positive for the Dow for December 5th, going back to 2002, neutral to positive with the S&P and NASDAQ. And we do see a little bit of a bump here, and then we kind of drift a little bit. It's typically the second part of December where we see more positive seasonality, and it's shown by this chart here. First half does okay, second half tends to do better. This also shows that December tends to be quite positive. This also shows how the second half is more positive, and we typically don't see two down Decembers in a row, according to this Carson chart. This also shows the positive seasonality going into the end of the year, as does this chart. And this chart also shows that as well. And then we have the composite, which also shows positive seasonality. So we do have historical precedents here. We just need price action to kick into gear. All right, so what's negative now? Still the shorter term growth to value and discretionary to staples ratio. Ease of movement, even though it improved, it's still below zero. And the swelling trending oscillator for the last number of days has been declining. And we have this confirmed Hindenburg Omen in the background. Positive though, it's still heavily positive with all of our three smart money indicators. We're just not moving right now. And the longer term growth to value and discretionary to staples ratios are positive. We're still positive with the McClellan oscillator and summation index, both for the S&P and NYSE. Momentum has been improving and turning positive even more. The parabolic SAR is positive, as is the bullish percent indexes for the S&P, NYSE, and NASDAQ 100. The money flow changed back. That was on the negative side. It's now over on the positive side again. Ultimate oscillator is still positive. And the vortex also came back over to the positive side. And the momentum for the NASDAQ 100 is positive. Financial sector still in an uptrend, but underperforming. And I'll go over these again in the weekend videos. The long-term special K daily and weekly charts are positive. And then we have a praying bottom Fisher buy signal, which I put on the correct slide today. All right. And then we just want to keep an eye on this. These are posted on the YouTube community tab. And we just see here with this R1, we've been having a hard time getting above 68.60. And that's lining up with an overhead resistance point. Now, we get a report that the market likes, and we might be able to break above this. If we get a report that's kind of lukewarm and doesn't really give the market much direction, this still could pose some overhead resistance. And then here are the pivot points for Friday's session. So our conclusion hasn't changed lately here. We're positive on all three time frames. We are improving, but we're not trending. We're starting to possibly trend in the short term. We're not really trending in the intermediate term yet. And we're positive in the long term, but we're more than 10% above the 200-day simple moving average. Thank you. I hope you have a wonderful day, and I will talk to you in the next video.